Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
So, Janine, it looks like more homes in Ontario are selling below list price. What do you think this means for potential home buyers right now?
Well, Steve, it seems like the market is cooling down a bit, which might be a relief for those who have been sitting on the sidelines. Data from FSRA indicates that buyers could face fewer bidding wars in the Greater Toronto Area this spring. It seems like more would-be home buyers are waiting to see how the market evolves.
That's an interesting point. The analysis found that nearly two-thirds of homes in the Greater Toronto Area sold for less than the list price in March. That's a significant increase from last year. It suggests that the competition might not be as fierce, at least for now.
Exactly, Steve. And it's not just in Toronto. The Halton region, for example, saw only a small fraction of homes selling at or above asking price. It seems like many buyers are taking a step back, perhaps due to the economic uncertainties we're facing.
Yes, with the ongoing fears about U.S. tariffs impacting Canada's industries, it makes sense that people might be hesitant to make big financial commitments like buying a home. But this could also mean fewer bidding wars, which some buyers might see as an opportunity.
That's true, Steve. The current market might give buyers a chance to shop around a bit more, find a better deal, and secure good financing. It's a different dynamic from having to compete against numerous other buyers in a bidding war.
And with new rules increasing the price cap for insured mortgages and expanded access to 30-year mortgage amortizations, there might be more opportunities for first-time homebuyers. It could be a good time to consider areas like Davenport or Sinclair West.
Yes, those areas are quite appealing, especially with the softening market and more favorable mortgage rules. But it's important to remember that buying a home is a personal decision. It depends on individual circumstances, including job stability and long-term financial goals.
Absolutely, Janine. While the market conditions might be favorable for some, it's crucial for buyers to assess their own situations carefully. The uncertainty around the upcoming federal election could also impact the market further.
Right, Steve. As Benji Katchen from FSRA mentioned, the market is gripped with uncertainty. However, for those who feel secure in their jobs, this could be an opportunity to take advantage of softening prices and favorable mortgage rates.
Janine, we're seeing quite a bit of turbulence in the stock markets recently, both in Canada and the United States. The Toronto Stock Exchange dropped almost 1,000 points, and U.S. markets are also taking a hit due to escalating tariff fears. What are your thoughts on how this might affect the mortgage and real estate sectors?
Steve, it's certainly a challenging time with the markets reacting to the ongoing trade tensions. As we know, the U.S. President's tariffs have stirred quite a bit of concern, and now with China's aggressive retaliation, we're seeing a global trade war that could have several ripple effects.
Indeed, the S&P/TSX Composite Index is down significantly, and the energy and base metal stocks are particularly hard hit. This kind of market volatility can impact consumer confidence, which is crucial for the real estate market. When people are uncertain about the economy, they might hesitate to make large purchases like homes.
That's right, Steve. And with the Canadian dollar also taking a hit, it adds another layer of complexity for home buyers. A weaker Canadian dollar can increase the cost of imported goods, including construction materials, which could affect housing prices.
Absolutely, Janine. And let's not forget the potential impact on interest rates. With the Canadian labor market showing signs of weakness, there might be pressure on the Bank of Canada to consider rate cuts. This could be beneficial for mortgage rates, making it more affordable for buyers to finance their homes.
That's a good point, Steve. While lower interest rates can make mortgages more attractive, it's important for buyers to assess their own financial situations carefully. The economic uncertainty means we have to be cautious about making long-term financial commitments.
Exactly, Janine. And economists are warning that these tariffs could lead to inflationary pressures and weigh on economic growth, possibly even leading to a recession. This could further complicate the decision-making process for potential homebuyers.
Steve, it's crucial for buyers to stay informed and work with trusted professionals to navigate these uncertain times. While the market might be challenging, there are always opportunities if you're prepared and have a solid understanding of your financial goals.
As we delve deeper into Canada's labor market situation, it's clear there's been a significant shift. The March jobs report showed a decline of 33,000 jobs, marking the largest drop in 3 years. This unexpected downturn is causing speculation about potential interest rate cuts by the Bank of Canada.
Yes, Steve, it's a concerning trend. The unemployment rate has ticked up to 6.7% from 6.6% in February. With the ongoing trade tensions and recession fears, the labor market seems to be feeling the pressure. It's a challenging time for many Canadians.
Analysts had previously anticipated a hold on interest rates at the upcoming Bank of Canada meeting. However, the new data has reignited discussions about further rate cuts. With the bank having already reduced rates 7 times recently, there's a growing sentiment that more cuts might be necessary to stimulate the economy.
It's interesting to note that while U.S. tariffs are often blamed for these employment challenges, two-thirds of the job losses were actually in the services sector, suggesting deeper issues at play. Economists like Bradley Saunders from Capital Economics highlight that these broader weaknesses don't bode well for the future.
Right, Janine? The potential for further rate cuts is also tied to the central bank's need to support both consumer and business spending, especially with the drag from global trade issues. The policy rate has already been brought down to 2.75% from a high of 5.00% last summer.
And with the Canadian dollar under pressure, imported goods, including construction materials, could see price increases. This complicates the housing market further, as potential homebuyers might face higher costs. It's a delicate balance for the Bank of Canada to maintain economic stability.
Exactly. The labor market's recent performance, combined with global market turbulence, puts the Bank of Canada in a tough spot. They have to weigh the risks of cutting rates against the potential inflationary pressures that might arise.
As Douglas Porter from BMO Economics mentioned, the situation remains fluid. While there's pressure for rate cuts, the bank is cautious, especially with inflation concerns lingering. It's a waiting game to see how the data unfolds in the coming weeks.
And with economists like Andrew Grantham from CIBC Economics pointing to the likelihood of more labor market weakness, it's crucial for homebuyers and investors to stay informed. The economic landscape is shifting, and so are the opportunities and challenges within it. Now, Janine, let's turn our attention to some regulatory news that's making waves in Ontario's mortgage industry. The Financial Services Regulatory Authority, or FSRA, has taken significant enforcement action against Harold Gerstle and his company, Harold the Mortgage Closer Incorporated. What can you tell us about this situation?
Steve, this is a crucial development. FSRA has issued orders to revoke the mortgage brokerage license for Harold the Mortgage Closer Inc. and refused to renew Harold Gerstle's mortgage broker license. Moreover, they've imposed administrative monetary penalties totaling $70,000 against Gerstle.
That's quite a substantial penalty, Janine. It seems FSRA is making a strong statement about the importance of integrity and cooperation within the mortgage brokering sector. Alyssa Sinha, FSRA's Director of Litigation and Enforcement, emphasized that transparency, honesty, and accountability are non-negotiable in this industry.
Absolutely, Steve. The tribunal's decision highlights that mortgage brokers and agents must fully cooperate with FSRA's investigations and answer questions honestly. Anything less, as they noted, could undermine confidence in the entire industry.
It appears that Gerstle's actions, as found by the tribunal, were contrary to the mortgage brokerage's Lenders and Administrators Act 2006. He reportedly failed to cooperate with regulatory investigations and provided false or misleading information to FSRA.
Yes, Steve. The tribunal described his conduct as a flagrant failure to cooperate and a repudiation of FSRA's regulatory mandate and authority. This kind of behavior is clearly unacceptable and resulted in the revocation of HTMC's brokerage license since Gerstel, as the principal broker, was deemed unsuitable to hold a license.
The FSRA's decision follows the tribunal's ruling in the case of Harold Gerstel and Harold the Mortgage Closer Inc. versus Ontario's Chief Executive Officer of FSRA. It's a reminder of the essential role regulatory bodies play in maintaining industry standards.
Indeed, Steve. And it's worth noting that FSRA has also issued a second notice of proposal concerning Gerstel and related entities, which remains before the tribunal. This ongoing scrutiny underscores the seriousness of FSRA's commitment to protecting consumers and ensuring industry compliance.
It's clear that FSRA is determined to uphold the integrity of the mortgage brokering sector. For our listeners, it's a reminder of the importance of working with professionals who adhere to regulatory standards and act in their clients' best interests.
Absolutely, Steve. Consumers deserve to work with brokers and agents they can trust, and regulatory actions like these help reinforce that trust. It's a critical part of ensuring that the mortgage industry remains reliable and transparent.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.